But I had a mentor early on in my career tell me, if your idea is shiny and beautiful and you want everyone to love it, that's great. But if no one is willing to give their resources to you for it, it's art. And art has a place in the world, but it's not a business.
Your network is your net worth. Come listen to some of the most successful people I know share invaluable knowledge, stories, and advice in real estate, business, and beyond. This is Weiss Advice. Whether you want to take your business or personal life to the next level, look no further. Welcome back to Weiss Advice. I am your host, Yona Weiss. It is great to have you on the show, Brian. How are you doing today?
I'm doing well, thank you. I appreciate you having me on.
Yeah, it is my pleasure. I'm grateful that we connected and you're able to reach out and we can share some of your deep, vast experience in the private equity space and finances and real estate, especially because a lot of our guests are talk about real estate and a lot of our listeners invest in real estate and like to learn about different avenues, different types of real estate investments. And so I think it's really cool to bring people on from totally different backgrounds and people that have a lot of different life experiences. So just a little bit about Brian. He's the president and founder of Excelsior. And so, so you're spearheading that, the investor relations, capital markets. So you're really doing a lot of different things within that, bringing your experience in private equity. Before that, you had an institutional private equity firm, which you guys invested upwards of how many hundreds of millions of?
That portfolio was about $250 million gross.
Awesome. And so a lot of background in the, institutional wealth, which is something we haven't really touched on a lot here on this show. So I'm happy to have you on the show. We can go on and on about your background and about your about all the accolades we can speak about you, but I'd just love to kind of jump in from it. So you have a degree, you have a law degree, you were an attorney at a certain point, and then how did you shift from doing that into getting into private equity, into real estate?
I married well, to be honest with you. Yeah, from upstate New York originally. I went to college in Connecticut at a liberal arts college there. And I met my wife. She was the same class as me. And she's from Nashville originally. And her family has a family office, so a family investment partnership for the benefit of their own family that invested in commercial real estate, private equity for the last 25, 30 years. So I practiced law for a number of years and then just really fell into the commercial real estate business through the family, working with various sponsors, investing in certain funds and co-investing with certain general partners. Mm-hmm. So completely fortuitous and, had an unfair advantage in life, frankly, because of my wife's family and their experience and their connections, honestly.
Well, you have to take advantage with whatever is brought to you and the opportunities that come your way. And, that's great for you. I mean, you've definitely done well with that opportunity, to say the least. So now, at this point in your career, having been involved for, the past 20 years or so in commercial real estate, in one form or another, what brings you, the most joy in your job and what you're doing?
Yeah, I think I've been doing this for a while. The biggest joy I get is in the commercial real estate space. For a long time, it was really the only way you could access a lot of these investment opportunities was through some kind of Wall Street fund of funds or a one-off opportunity that your buddy gave to you. And I think seeing this democratization of access to alternatives, be it real estate, be it private equity, be it debt, whatever you want to call it, and giving people the opportunity to create wealth and get income outside of the big machine of Wall Street, and not being able to have any transparency into the fees or the structure or meet the people that are actually running their money. Mm-hmm. I think that's going to be a huge shift moving forward, regardless of who wins the presidential election. I think we'll continue to see accredited investor have more and more opportunities to invest in private opportunities, which I think is really exciting and a long time coming.
Yeah, absolutely. And we have seen that over the past couple of decades with that it's just been opened up, to so many different people. And I think a lot of the people listening onto this call, like didn't know, a lot of my clients and the people I work with are individuals who got into real estate after a career in corporate America, after, thinking that they had to give their money to Wall Street and, it was safe in a 401k or what have you, and came to realize or are realizing now, frankly, that they can take hold of their own wealth and their opportunities. And it does come by, by networking, and it does come by meeting the right people and having the right connections. But nevertheless, there's still a lot of opportunities out there.
Yeah, and seeing the advent of social media and LinkedIn in particular, I mean, you and I met through a shared connection, but I just reached out, said hi. I wanted to learn more about your business and what you're doing because you seem to have a great following. And that's really empowering as an individual because I can build my business and grow my business just through my own network and spending time on LinkedIn and learning. And I had a call earlier today with a friend who wanted to get into commercial real estate business. And I said, listen, the barrier to entry might appear really high to you, but if you just spend time listening to podcasts,
Mm-hmm.
doing some homework, buying some used books on Amazon for $1 or two, you can really teach yourself a lot.
Yeah.
And I think that's really exciting for what I see as this kind of large accreditor investor world to be able to access some of these exciting opportunities.
Absolutely. And even the non-accredited investors, I mean, people are starting out and there's so much opportunity. And you said it so right in terms of LinkedIn, just using it properly. And if you're a listener to this show, you've probably come across a lot of the different episodes that I've spoken about LinkedIn. And I'm a huge, supporter of what the platform has to offer. So yeah, check those out. But, kind of shifting gears a little bit, you have had experience working with family offices, obviously your own, right? Extended family office. And are they solely focused on, you mentioned they focus on commercial real estate and private equity, but is there some, niche within commercial real estate that they invest in more than anything else?
That's a great question. There's an adage in the family office world that once you meet one family office, you've met one family office. They're just like your family or my family. It's very hard to get a grasp or a reflection of what's going on within that entire ecosystem. Everyone's different.
Yeah.
They're, they have the same problems and issues that we do, but they just have a lot more zeros. And not to simplify it, but I think that's really the reality. What I've found is the biggest dynamic within a family office is at some point along the line, you will realize that inflation and your spend rate in order to maintain your quality of life and your cost of living catches up with the exponential growth of your family. And so if you've had a liquidity event, you need to understand that cash flow and income and being entrepreneurial and being a wealth creator within every generation is important to be able to maintain that quality of life moving forward. And
Mm-hmm.
oftentimes that realization does not happen until the second generation or the third generation, which is why you often get this dynamic of shirt sleeves to shirt sleeves in 3 generations, which unfortunately is very true. And so I think within families, at least in my experience, they're really focused on income production, so yield, cash flow,
Mm-hmm.
really driving home the tax benefits that they get as being a taxable investor.
Mm-hmm.
And for the most part, they love real estate. Oftentimes, the original wealth came from real estate, but it's a great vehicle to pass intergenerational on or wealth on to a long time horizon. In terms of the allocation that they have,
Yeah. And like
it's
specific
probably
asset classes.
yeah, it's probably pretty representative of a lot of your investors and folks that are listening to this podcast. They have a lot of multifamily exposure, some single family homes, some triple net retail, some office, but I would probably say multifamily is the largest.
Interesting. And why would you say that? Because obviously, for a lot of people listening to this, they know that because multifamily is really the most popular out there in the culture, right? In terms of investing. And it seems to be like the easiest kind of barrier to entry for a lot of people. But why do you think that is? That is so prevalent. Multifamily being like the best source of real estate investment.
Yeah, I mean, I think it's a very approachable thing. It's almost like education because at some point in your life, you probably lived in an apartment building, and so you can understand the fundamental dynamics of it.
Hmm.
Which is why I like office because for the most part, somebody has worked in an office in their life.
Right.
So it seems like it's an approachable product type and it's an approachable food group within the commercial real estate business. And because there's a lot of people out there doing syndications like yourself, you can learn passively, get to know a sponsor and a GP, and then a lot of families will go co-GP
Hmm.
or become sponsors themselves. And it just seems like it's an accessible price point to begin with, and fundamentally, it's a very resilient asset because people need to live somewhere.
Absolutely, yeah. And people need to live somewhere, and people always need to live somewhere, and that's not going any away anytime. And the truth of the matter is, more and more, especially as the generation goes on, more and more people are seeing that it's easier to rent than it is to own. And you're still going to have, I mean, people who want to buy their own home wherever you go, in any market. But the increase of, especially the new generation, whatever you want to call it, generation X, Z, Y, I don't care what you call it, but they are renters much more so than homeowners.
Yeah, and frankly, you've got the federal government in the form of Fannie and Freddie really subsidizing a lot of that inexpensive debt. So your cost of capital is very reasonable,
Yes,
and so you can produce outsized returns.
absolutely. What are some of the challenges that you've come across in terms of your firm's investment, or working with, let's just focus on your firm, on what you guys are either now in this current market? What are the biggest challenges?
Yeah. So I'll talk about probably the biggest mistake I made in my career, and then we can talk about current issues.
Yeah.
I continue to make mistakes and screw up on a daily basis. I just hope not to repeat them. But frankly, when I started the business, my father-in-law has a has a good reputation in Nashville. He gave me an investment, a fairly good sized amount of money at the time, I thought, and introduced me to two people and said, listen, you can tell everyone in town that I'm an investor with you. You can use my name. I'll make two introductions for you, but then you're on your own. You need to learn how to raise capital the hard way. And at the time, I was very frustrated by that. But with the benefit of retrospect, it was probably one of the best things that he could have done for me because I learned the hard way how to raise capital, how to meet folks, how to be helpful to other people so that
Hmm.
they introduce you to people down the road.
Right.
That was very difficult. But once I learned the secret to raising capital in terms of, I have a kind of a number of key elements or fundamentals that I use. And once I figured that out and unlocked that, I was able to raise $65 million from individuals and families in the span of 3 or 4 years. So we grew really fast. We
Wow.
bought a lot of property and built up this kind of $250 million portfolio really quickly, which was great. The mistake I made was we became really focused on being deal guys and transacting.
Hmm.
And I totally left investor relations, internal infrastructure, and business development and a lot of things by the wayside in order to grow quickly.
Right.
And that was the biggest mistake I've made in my career, I think.
Yeah.
So what I've been doing the last 2 years, when I started my direct syndication platform, is focus on investor relations, making sure that I have the right infrastructure and personnel internally to manage all of my investors. And it's really been terrific, but I don't think I would be the manager today if I didn't go through those really painful moments that I did early in my career. And I'm
Absolutely.
grateful that it happened when it did, because I still have a lot of runway in front of me.
Hmm.
But it was, I mean, I definitely got my teeth kicked in.
Yeah.
But I managed to come back and had a lot of hard conversations with a lot of my investors. So that was by far the biggest mistake I made. Today, in terms of challenges, obviously I focus on office space, with kind of exclusively what we do.
Hmm.
There's a narrative out there that nobody's ever going to go back to the office
Yeah.
again. There's real headwinds in the office world. I won't get into, or I'm happy to, if we can get into a conversation about why I think that's not true. But
Hmm.
it's certainly a challenge for me right now. And I think most pointedly, the state of the debt markets is a real issue. We managed to close the deal 2 weeks ago, but it took a lot of work, a lot of creativity. My team really came through, but right now the debt markets are still a little rocky, and so getting deals done, just underwriting them, is a bit of a challenge right now.
Yeah, absolutely. Now, I would like to get into why you think the office space still has a lot of potential, even
Sure.
with the narrative out there, which we've all heard that no one's ever gonna. Well, maybe not no one, but there's for sure going to be a large percentage of people migrating away from office or the traditional office space, let's say.
Mhm.
So,
Absolutely.
how do you see office space changing in the next year or two?
Sure. And I've got a horse in this race, right? So
Right. So
take
you are
all
a
horses.
little bit, you're a little bit biased that you want it
I'm
to work
biased,
out.
and I'll just put that out there. But today we run about 2.5 million square feet total. So the overall portfolio value is 350 million. I've had 90% rent payment April, May, and June. We've had a couple of people ask for rent relief, but part of our investment thesis is secondary markets will be resilient in a downturn. And so luckily we've been able to make full distributions on our assets for the most part. And so we feel good about where we are. Talking about office as an asset class,
Hmm.
pre-COVID, 4% of the workforce in America worked remotely. Clearly that's going to tick up in a post-COVID world when people realize that they can work from home or work remotely efficiently and productively.
Hmm.
That being said, this movement over the last cycle towards density, towards really expensive space in terms of tenant improvements and the build outs, the WeWork model, where some of their stores or locations had 75 square feet per user, which is extremely dense. Traditional office is 250 square feet per employee.
Hmm.
So I think with social distancing and just people feeling more comfortable about going to the office, you're going to see the pendulum swing back towards less density and more traditional office layouts.
Right.
In terms of where I think the future of office goes, I think a hub and spoke model really works well. So you're going to have the mothership in New York or San Francisco, and you've seen Twitter and Facebook say that they're going to be working remotely
Right.
forever. But if you actually read the transcripts and talk to the folks that are making the decisions, it's not that they're going to be working from home forever. It's that they're going to be moving a lot of their workforce to secondary markets in a hub and spoke model. So they'll be moving to Denver, Nashville, Charlotte, Austin, etc.,
Yeah.
where they can get more room for less money.
Hmm.
I think it'll be similar to '08, where people said office was going to die. But what really happened was users and especially corporate tenants realized maybe we don't need as much space as we did. Maybe we can save some more money and be even more efficient with less space. So I think office is just going to change. Maybe leases will be shorter. Maybe users will think about their layouts differently.
Yeah.
But fundamentally, you need to have some kind of corporate culture. You need to be able to onboard new employees. And there needs to be some semblance of a work life divide. I think otherwise you're going to have severe burnout. And so when you see these surveys about 80% plus of employees would like to work remotely forever, well, sure, if you're a C suite person, you can probably get away with that. But if you want to climb the ladder, you need to put in FaceTime, you need to build teams. So I think office will change, but I don't think it's going away. It's proven to be a very resilient asset class after 9/11 and '08, and I think it will continue to be so.
Yeah. Okay, well, it's very insightful. I'd love to just touch on you. You mentioned kind of in passing about your secrets of capital raising that you have, and if you would just share with us one or two tips or things that you find to be fundamentals that have helped you in raising as much capital as you have.
Yeah. And I think one of the interesting things about office is the reason not a lot of people have exposure to it is because the price points are typically pretty high. I mean, for a class A office building, even in a secondary tertiary market, 10 or $15 million is kind of your starting point. So at 70% leverage, you're talking about, $3 to $5 million of equity, which is very capital intensive, which is why I think multifamily makes a lot of sense for folks getting started. But a reason that people don't have as much exposure to the office world. If you want my full kind of breakdown, you can ping me on LinkedIn. I'll set up a time to talk to you, and I'm happy to give you all of my secret sauce. But on a high level, oftentimes I think entrepreneurs and people getting in the commercial real estate business from day one, they have this idea, right? And they have this passion and they want to bring this idea to the marketplace. And they think the marketplace will react just wonderfully to it. But I had a mentor early on in my career tell me, if your idea is shiny and beautiful and you want everyone to love it, that's great. But if no one is willing to give their resources to you for it, it's art. And art has a place in the world, but it's not a business. So early in my career, I had an idea about what would be cool to do in terms of commercial real estate projects, etc. And I was able to raise around it, but it was really difficult. It just seemed like too much work. Like I thought more people should be investing with me. I should be getting more introductions, etc. And what I finally did was I went to my network of people that logically would invest with me, right? Your first degree network, your friends, your family, your high net worth individuals that know you, that will take the meeting, that will probably invest with you almost regardless of the deal, just because you have that relationship. Instead of jamming that product down their throats, actually sit down and ask them, listen, if you're going to invest in commercial real estate, what do you want it to look like?
Mm-hmm.
What do you want that experience to be?
Right.
What do you want the return profile to be? What is the biggest problem and pain you have in accessing commercial real estate deals today?
Mm-hmm.
And once I understood exactly what my network wanted, which is really three things: capital preservation, yield, quarterly coupons, 8 to 10%, and really, really leveraging the tax benefits that you get having direct real estate exposure.
Mm-hmm.
Once I realized that those are the three drivers for people to make those decisions, I was able to raise a lot of capital.
Gotcha. So it's really more about listening, and as opposed to trying to put your ideas, which those are, really is applicable to everyone in any stage of life or any business transaction. Listen before you speak, and I think that's tremendous advice and tremendous help for a lot of people. So I want to jump right into the final four here, Brian. It's been great, and we'll definitely have to continue the conversation. And anyone wants to hit him up on LinkedIn, that's where you can hear more about this. But what's the worst job that you ever had?
So my dad is an attorney, still is, grinding it out upstate New York. And one of his clients was heavy duty construction road company. They did infrastructure deals for the state of New York. So every summer when I was in later high school and then college, I would work on one of the road crews. And my dad would tell his client, don't let Brian just drive the truck or do whatever. He actually needs to do the work. So in New York in the summer,
oh man,
making mud, doing masonry work or doing asphalt work, brutal.
wow.
But it taught me that even though starting a company might seem like hard work, or putting a deal together or raising capital, etc., any one of those crew members would take that gig in a heartbeat compared to what they did every day to make money, because it was brutal work. And it really did teach me that, we're fortunate to have the opportunities that we have today. But that was tough. It was hard work.
Yeah, definitely sounds like it. I can't imagine something like that. But it's good to take the lesson from it. What's a book that you've read that's given you a paradigm shift?
Yeah, so I'm going to go back to law school. It was not a great experience for me. I did not enjoy it. And I've actually retired my license, which was a big day for me personally. But Real Property 101 was one of the classes you take as a 1L. Understanding that the entire basis of the US economy is fundamentally tied to the use of credit, and really real estate has the ability to go out and get credit, and the private ownership of real estate as the vehicle to do it is underpins the entire economy of the US.
Mm-hmm.
And when you spend time abroad and you go to some third world countries where individuals and private entities cannot own real estate, they have limited lease terms. That's one of the reasons that they do not have such robust capital market systems. And I think that just blew my mind when I thought about how many people have a mortgage on their home, how we take out debt every time that we buy a property, and how that ecosystem of the debt works.
Hmm.
I just didn't have an appreciation of it as a liberal arts major in college, and that completely changed my view of the world.
Oh, amazing. Okay. Was there like a textbook or something, or it's just the concept that
Yeah,
obviously?
it's everyone kind of reads the same book. I can't remember who the author is. It goes to show you how much attention I paid in law school.
What's a skill or talent that you would like to learn?
You know, I would love to learn how to code, how to learn how to be a programmer, understand a little bit more about the algorithms that drive LinkedIn, because I think it's fascinating.
Mm-hmm.
And one of the things that I've been doing while I've been in lockdown is really focusing on leveraging LinkedIn as a way to meet people. I mean, that's how I met you.
Right.
And being more consistent with my content provision, webinars, podcasts. And we use a lot of things like Slack, Asana,
Yeah.
Juniper Square, and the prop tech world, I think, just fascinates me. So I would love to be a little bit more conversant on it.
Sure. Absolutely. And I have a friend who's a real estate investor as well, and he just kind of out of the blue, he had that same desire about a year ago, I remember, and he was like, I'm just going to teach myself coding. And he literally just took like an online course, spent a little time every day and just did it. And then he got like a side hustle, like just a job at like a coding company, just to keep it up as like
Yeah.
a side hustle. So that's pretty cool. He was able to just kind of do that and create another stream of income from that just idea that, hey, I'd love to learn this skill. But for you, it sounds like just to understand and be able to maximize your abilities within the systems that you operate, which is very important. The fourth and final question is, what does success mean to you?
Yeah, and that's a big question, right? And I've thought about this concept for a long time, because for me, it was always, well, I'll get this next deal done and then everything's gonna be great. Well, once I get, 3 deals done, once I get 50 million of AUM, 100 million of AUM, 250 million of AUM, now I have 350 million of AUM. I've raised almost 100 million of equity. I have always been disappointed when I hit those milestones. And one of the things that I did when I started this new iteration of my firm is really take a step back and think, okay, for me, success is working with people I enjoy working with, being able to provide for my family. So I've got 2 little boys, a wife. I live in Nashville on in a house, and be able to send my children to private school. And so for me, success is enjoying what I'm able to do every day. One of the reasons I switched from being an attorney to real estate is I desperately wanted to be in the corporate law world. That was success for me. I wanted to prove to my dad that I was a capable person, and that was success for him. Networking, I met all these older real estate or older attorneys who were in their 50s and 60s. They were partners at prestigious firms, and they were all miserable. And the way that society was valuing their service was a direct correlation to how much time they spent on something.
Mm-hmm.
And I really wanted a job in a company where it was about what you could create and how efficient you could be, and not how much time you spent on something.
Right.
And what I love about my company now is, I work hard, but I work hard when I want to. And I have that kind of freedom and flexibility. And, frankly, I just want to keep doing what I'm doing because I've found a really good flow. I've got a great team behind me and a great family. So success is just continuing to do what I've been doing for the last few years, frankly.
Beautiful. Well put. Thank you so much for sharing with us today. Where can our listeners find more out about you and your company? How can people reach you?
Yeah, no, I appreciate you having me on. Thank you so much. ExcelsiorGP.com is the website, but I'm also very active on LinkedIn. So you can go to Excelsior GP or Brian Adams on LinkedIn. Message me, hit me up. I'm happy to talk. And I don't know if I can give you a lot of actionable advice, but I can definitely tell you what not to do, which I think is more useful, frankly.
Absolutely. Yeah. Has been a pleasure. We've definitely learned a lot today. It's been in a short time we spent together. So I appreciate your time. And to all our listeners, thank you again for joining us. I hope you got a lot of value out of this and Brian's wealth of knowledge in the space. And remember, the best advice comes only when you ask. Real quick, I have one question for you. Did you like this episode? If you did, I want to ask you a huge favor. See, the biggest thing that helps this podcast grow and that will spread this message to the whole world is that if you leave a review, a rating, and subscribe to the podcast. What that does is it basically tells the platforms that this podcast is out on is that you like my stuff and I'm doing something right. So take a few seconds out of your day, hit that subscribe button, leave a rating or review. I would be extremely grateful. Also, I want to hear from you guys. So I want to hear some feedback. If you have any questions for future episodes, please find me on LinkedIn, send me a DM, a connection request, Yona Weiss, and I'd love to hear from you.